I invest like a farmer. After I plant my crops and maybe they're not growing as fast as I think they should grow, I don't yell at them. I don't get angry. I don't uproot them. And in a similar fashion, if the stocks I buy don't go up as fast as I think they should, I don't get angry. I don't yell at them and I don't sell them. Further, I don't uproot my crops before they've even had a chance to produce something for me. So why would I sell my stocks before they've had a chance to produce something for me? And then lastly, if I have a maniac neighbor that continues to offer me less and less and less for the land I own that I think has a lot of potential, I'm not going to sell my land to him just because he says my land is worth less than I think it truly is worth. In a similar fashion, again, in the stock market with stocks I own, I'm not going to sell my companies because other people are telling me they're not worth what I think they should be worth. By definition, if you are an individual stock picker in the stock market and you are trying to beat the markets, you are going against the grain. It is a long and lonely road because you are saying that everybody else in the stock market is misvaluing this company and this stock. It takes an immense amount of patience. It can be frustrating. You can lose money short term, but that's the cost of setting yourself up for generational wealth, the ability, the access to making that sort of generational wealth. It doesn't come easily. It doesn't come free, but on this YouTube channel, that's what I focus on. And if that doesn't resonate with you, this probably isn't the YouTube channel for you. But if you're interested in this sort of thing, some companies that I think are generational wealth building opportunities, stay tuned and hear me out on each of these individual stocks. Anytime I make videos like this, there's people that click on the video and they skip through it and they just see what stock pick I'm buying and they end up buying that company and they don't hear anything else I have to say. And then they come back a month later and say, Rex, you're an idiot. This stock went down. But I don't care. I actually want my stocks to go down after I initially buy them so that I can buy them for an even cheaper valuation. In saying that, we have had incredible success on this YouTube channel. I'm probably due to be wrong, but if that philosophy resonates with you, make sure you hit that subscribe button down below. If you're new here or returning and not yet subscribed, we have one of the fastest growing stock market YouTube channels on this platform, and I think it's for a good reason. And I'd love to continue that. I know I'm somewhat biased, but also hit the like button, and while you're going down there, comment a stock that you are buying because I always like to do research and due diligence on new companies and new potential buying opportunities that I could step into. Without further ado though, let's go ahead and jump into this. To best understand why I'm buying the stocks I'm buying today, you need to understand where I'm at with the macro economy and where I think things are headed. We have an upcoming presidential election, and that concerns a lot of people. I think it's Dave Ramsey that says the people that live in your house control your outcome and your success much more than the person that sits in the White House. And I think that holds true in the stock market. I think that holds true for everything you do in life. That being said, no matter who is elected this November, they have a reckless spending platform based on economic experts. And what does that mean? Well, it means they're going to spend on a federal budget deficit, which is inflationary, but it also boosts the economy. It is stimulative to the economy. Pair that with a Federal Reserve that just cut interest rates by 50 basis points, and you have two factions that are stimulating the US economy. But that's not even it. We have the United States Treasury, which is separate from the Federal Reserve, that is also stimulating the economy by borrowing money at short-term interest rates and using that money to buy long-term interest rates, which holds long-term interest rates lower, which again is stimulative to the economy. So the three major controllers of money in our economy are all stimulating the economy, and they're set to continue to do so. And in my personal opinion, the stock market and our economy doesn't need the extra push at its back right now. Just last week, the Bureau of Economic Analysis, the BEA is what it's called, they announced significant upward revisions to GDP, personal income, the personal savings rate, and they also suggested that they would revise higher productivity growth and revise lower unit labor costs. The chart on the screen here shows it. The hard red line is the revised GDP, which is at an all-time high and is growing at an average pace of 3% right now. Then there's this chart that shows you personal incomes, disposable incomes, and compensation, which were all revised higher and are sitting at record highs or all-time highs. And here's the personal savings rate. A lot of people were concerned about this, but after the upwards revision, the personal savings rate continues to climb. And we can also look at things like the corporate profit margin, which is at an all-time high right now. We can look at stock prices, which are at all-time highs right now. We can look at housing prices, which are at all-time highs right now. And I don't understand how the Federal Reserve and other economic analysts and stock market influencers and pundits say that the federal funds rate has been restrictive to our economy. It is a fact that our GDP, our economic output, is at a record high right now. What about that is restrictive? Personal savings rates, personal incomes, corporate profit margins, all being at all-time highs. Where is the restrictiveness? And that's my point. I think the Federal Reserve and the Treasury and whoever is elected president in November is going to be stimulating an already warm or hot economy, which means that our economy could very well overheat. And 2021 is a great example of an economy that was overheating. What did investors do? Well, their risk appetite grew and grew and grew. They started seeking out more and more risk to seek out more and more potential return. That's the way every single bull market in history has unfolded. And I think that's where things are headed today. Now, this coincides with how I started this video. I want to be early. I want to beat everybody else to what the future trend will be. I think the future trend will be risk on returning. I think Bitcoin will have tremendous returns in 2025, and I think Bitcoin mining stocks will have tremendous returns in 2025. But as a whole, I think it's the small cap companies that have the most potential return going into 2025, and that's what I'll be discussing today. This is the last chart that I want to show you before we get into the stock picks, but I think this is maybe the most important one. You see, on this YouTube channel, we've been fighting against this mantra from everybody that we're on the doorstep of a recession or a depression. We've been the opposite. We've been proving all of these theories and theses wrong for the last couple of years. We've seen incredible success as a result of that. That's part of the reason this YouTube channel has grown so fast. But one thing that continues to be brought up by my viewers or people that come across my channels, they'll say, Rex, you've been right about everything. But what about the U.S. federal government debt? This is a problem, and I have to say I agree. At some point in the future, the federal government's debt is going to be a problem. Right now, it's not a problem, and let me tell you why. You see, people point to this chart, net interest paid on the government's debt, and how it's approaching $1 trillion, which is a scary figure. And it's one of those snowball things when it comes to debt, where the interest payments will continue to build higher and higher and higher and higher, which is scary because that money has to come from somewhere. But the piece to this puzzle that people miss quite often, I think, is that they forget who owns the federal government's debt. The people that own the federal government's debt are people like me and you watching this video, and corporations and Warren Buffett. If you have a high yield savings account, let's say at PayPal, or you earn high yield savings at Robinhood or at your local bank, you own the federal government's debt. That's how you get the high yield, risk-free on your money. And then you think about the companies and corporations that own the government's debt, and you realize that, wow, that's actually a really good thing for corporations and companies in America because it improves their profit margins. It allows them to weather a recession much better. It allows them to weather any sort of economic weakness, and it probably allows them to hire more people more often, which is a good thing for the economy. So although it's a scary chart and people will point to this and scream doomsday is coming, we have to realize that just like every other government outlay, interest payments on the government's debt is also stimulative to the economy. It's stimulative to consumers and businesses that hold this debt in one way or the other. But there's really one area of the stock market that's felt immense pain, and this is where I think the most opportunity lies. We can look at things like the forward operating earnings per share of large caps, mid caps, and small cap companies and see that the forward operating earnings per share of large caps has skyrocketed to new all-time highs, and the prior all-time high isn't even close. They have literally skyrocketed. Mid-cap companies, their forward operating earnings per share are sitting basically right at all-time highs, but then you look at this green line here. This is the small cap companies. They are still below all-time highs, and they have flatlined since interest rates first were hiked. And it makes sense. It's really no secret that higher interest rates impact smaller companies more than large companies that have better balance sheets, higher profit margins, and established businesses. But what I think the markets are missing right now is, yes, small caps are the most impacted by interest rates rising, but as a result of that, they'll also be the ones to benefit most from interest rates falling. We can look at what analysts expect quarterly earnings per share growth rates to be in 2025. And we can see, it again, small caps are the green bar here. Small cap companies are set to outpace the large caps and mid caps in earnings growth for the first time since 2021. I don't think the markets have caught on to this, and it might take another quarter or two, maybe 3 quarters, before the numbers actually start to come in. But when it smacks the markets in the face and it smacks retail investors in the face that, oh, all of a sudden the small caps are the companies growing fastest, I want to put my money there. It's going to happen quickly. It's going to happen quickly that investors start to pile their money into the small cap companies. And again, you think of all of the money in money market mutual funds earning that 5% risk-free yield. Well, as interest rates come down, that money has to go somewhere. And more than likely, it will come back into the stock market. And it's a natural thing. People want to invest in things that are growing the fastest. So if my thesis that the Federal Reserve, the Treasury Department, and the future president of the United States is set to stimulate an already hot economy, it's going to be these small cap companies and risk on trades that benefit the most. There are companies that make up the small cap index that are much healthier than others, yet those companies have been punished the same because they're under the same small cap basket and nobody wanted to own small caps. But this has presented the opportunity to find some diamonds in the rough. One of those companies, I've talked about them before, is Flux Power Holdings. Flux Power is a $48 million company is all. Flux Power is a microcap company that's valued at $48 million, yet their revenue over the trailing 12 months has been $64 million. They've had revenue decline year over year, but in speaking with the management team personally, they think they're going to return to revenue growth and double-digit revenue growth sometime over the next 2 or 3 quarters. And from there, this business model is going to scale up further and further. What do? They produce lithium-ion batteries for the material handling sector, ground support equipment, battery energy storage, the Department of Defense. All of those verticals Flux Power is getting involved with. Better yet, Flux Power is going to be profitable as well sometime in the next 2 or 3 quarters based on my conversations with the management team. And that is really exciting. And if that truly is the case, this company's market cap probably shouldn't be $48 million right now. And that's why I'll continue to accumulate a bigger and bigger position in this company. Their customer base, you can look at their investor relations slide deck, which I encourage everybody to do for any company you want to purchase. And you'll see that their customer base is companies like Walmart and Costco, Frito-Lay, again, the Department of Defense, Delta Airlines, Pepsi, Fortune 100 and Fortune 50 customers that have signed on and purchased Flux Power lithium-ion batteries. And once they've gotten these customers in the door, they've stuck with Flux Power. Flux Power has seen 0 canceled orders. All they've seen is orders be pushed back into 2025. We all know that the one sector of the economy that's felt some pain is the goods producing sector of our economy, but it's going to come roaring back. And when it does, Flux Power, that's just going to be a huge tailwind for the company that already has a strong platform and already is growing very, very quickly. The management team at the company has a goal to double Flux over the short term and then 10x Flux over the longer term, which you can do the math. A 10x of revenues would be $640 million of revenue. And I have a spreadsheet that breaks this down in my paid monthly members Discord server. If you want access to that, hit the join button down below or hit my Patreon link in the pinned comment. We have a lot of fun in the Discord server, and I'm entirely independent and self-funded. Your support means a lot to me that you're just watching this video, but if you want to go the extra step and support me, as well as get access to a bunch of those awesome perks, again, consider joining the membership. Recent news out of Flux Power was that they launched a second private label battery program. If any of you watching this have experience with private label programs, they're ultimately a good thing for the company. It gets you in the door early with manufacturers of forklifts in this case. And if you're in the door early with these manufacturers, well, whoever buys those forklifts, if they want to buy future forklifts and they're happy with the way the battery worked in their current forklift, or if they just need a replacement of their old battery pack, well, they're going to go right back to Flux Power. This is a platform that Flux Power can build off of. And again, I think this company is going to be huge over the coming years, and interest rates coming down are only going to help out this company. And then again, you have Flux Power's customer base, a very, very strong customer base that they can leverage to sign on new customers. They can show them the work they've done with PepsiCo, Walmart, and companies like that. That is a big, big advantage for a company like Flux Power. Secondly, this is actually almost an identical play. It's One Stop Systems. One Stop Systems has been involved with real AI and sensor processing and automation for years now. They aren't writing this AI flash in the pan. They have been doing this for years. I can't say that enough. Yet, they haven't seen the same sort of momentum in their stock price as all these other AI plays for one reason or another. One Stop Systems is also a $48 million company, and I think this one could be even bigger than Flux Power one day. One Stop Systems also has negative revenue growth, and a lot of people will stop their research there, and that's ultimately why retail investors lose. The reason their revenue has declined year over year is because of manufactured revenue decline. And what I mean by that, well, it means that they cut out one of their larger customers that was a much lower margin customer. So they kind of bit the bullet, getting rid of a big chunk of sales to increase the margins and profitability of the company. Now their focus is entirely on automation, AI, sensor processing, self-driving technology. Also, their major customer, Department of Defense, the U.S. Army, the U.S. military, all of those different branches purchase data centers from One Stop Systems. When we think about AI, I think the real AI and the real advantage that companies will get will come at the edge. Not in a remote data center where there's any amount of lag, but in mobile, ruggedized data centers at the edge. And that's exactly what One Stop Systems provides. This company has done $53 million of revenue over the last 12 months, and their balance sheet is very, very healthy. They have $12 million of cash to only $3 million of debt, and they hired a new CEO who is focused almost entirely on the AI transportable space. Recent news out of One Stop Systems, this should get you very excited. One Stop Systems enters into a cooperative research and development agreement with the United States Special Operations Command. This is a very, very young industry when it comes to AI and edge processing, but it's an industry that's set to grow faster than any other industry in the world. Right now, One Stop Systems is creating that platform to launch off of. They have a revenue line item on their 10Q that you'll see called customer funded development. That's exactly what it sounds like. Their customers pay them to develop solutions for them. The thing with what One Stop Systems does is they create specialized, unique data centers for these customers. And again, as they get themselves in the door early, that incumbent position, being that existing supplier of this stuff for their customers, is a tremendous advantage as this industry continues to grow and more legitimate dollars come into this space. And these customers of One Stop Systems start to spend more and more and more as the ROI presents itself through the years. The press release says the collaboration agreement between One Stop Systems and the United States Special Operations Forces is focused on advancing the development of cutting-edge AI and machine learning computing solutions designed specifically for rugged edge environments, places where traditional computing systems may not be suitable due to extreme conditions such as harsh climates or remote locations. And the company's vice president of sales says that today's announcement also reflects our multi-year strategy focused on expanding our offerings and establishing relationships across all branches of the United States Armed Forces. The SOFCRADA represents an important pillar within our $1 billion plus sales pipeline, as we believe the United States Department of Defense will accelerate the adaptation of the types of enterprise-class architecture OSS provides for AI, machine learning, sensor fusion, and autonomy applications. Those are a lot of big words, but all you really need to know is that their sales pipeline for a $48 million company exceeds $1 billion at a point where this industry is very, very young. Now, One Stop Systems isn't going to see all of that pipeline come through revenue and come down to the bottom line. That's a fact, but you can factor that pipeline and say, well, maybe they'll win 20%, 30% of that pipeline, and you can do the math there. Revenue numbers for this company could explode over the coming 5 years, and after that, they'll continue to grow and grow and grow and grow. And I also have a spreadsheet showing that for my paid monthly members if you want to see it. This gets very, very exciting. Again, another generational wealth building opportunity, in my personal opinion. So with Flux Power and One Stop Systems, they are in industries that are very young, that are set to grow very, very quickly over the coming decade plus. Lastly, this is the first time I'm mentioning CleanSpark since June. So it's been some months. CleanSpark stock since then has quieted down from $20 per share to $9 per share. That is highly volatile. You might ask, why would anybody want to own this? Well, exactly for the reason that I just said. It is volatile. Bitcoin is volatile. CleanSpark is a Bitcoin mining company, and Bitcoin mining companies are basically call options on Bitcoin, which is already volatile. And there's no greater risk on asset in the world than Bitcoin and Bitcoin mining companies. CleanSpark is now more than a $2 billion company, which is crazy to think about because when I first started to talk about CleanSpark, this was a sub $100 million company, and I think sub $50 million company similar to Flux Power and One Stop Systems. The one problem with CleanSpark and all of the other Bitcoin mining companies, you'll hear other pundits say the same thing, is they rely heavily on dilution because they mine the Bitcoin and they hold onto that Bitcoin. They don't sell anything they produce. So to get cash to continue to run the business and grow the business, they dilute shareholders. They sell additional shares into the public markets, which can be a problem. But the bet that you're making as an investor in one of these companies is that whatever they choose to acquire or however they choose to grow as a result of that dilution, you're betting that it will outweigh or outpace any value taken away from dilution that occurs. It is a fact that CleanSpark has been the best at doing this. I think they have the best management team. I've had their CEO, their chairman of the board as well on my YouTube channel for an interview before. I've talked to them in person before. They just have it figured out. And again, if the macroeconomy plays out how I think it will, investors are going to be searching for risk on, and there's no better place to get risk on than CleanSpark. I'll have a full dedicated video to CleanSpark coming out this week, so stay tuned for it. We have a lot to discuss because a lot has taken place at the company and in the Bitcoin network that we need to discuss. And it's going to take an entire video to talk about it. This is their recent news that they've reported. They continue to grow and acquire additional sites. They continue to be the most efficient. They continue to execute the best out of any of the Bitcoin mining companies. And ultimately, that's kind of a Cliff Notes version of why I prefer exposure to CleanSpark above any other Bitcoin mining company. People will try and micro-analyze these sorts of stocks, and they'll look at charts of Bitcoin. They'll look at charts of these Bitcoin mining stocks. It doesn't matter. I've been in this space for 6-7 years now. One of the first companies I bought was Riot Blockchain, which is now Riot Platforms, like back in 2017 or 2018. That was one of the first stocks I ever bought, and they were a Bitcoin mining operation back then, and they still are today. Although I don't own them anymore, I own CleanSpark for my Bitcoin exposure. As soon as you start to look at the charts and say, well, we're set to go higher or we're set to go lower, the market's going to humble you. It's going to prove you wrong. I don't know anybody out there that has been successful trying to look at charts of these companies and decide when it's time to buy and when it's time to sell. What you really want to focus on is, where is risk appetite going to go over the coming years? I think as a result, again, of the Federal Reserve, the Treasury, and the President stimulating an already warm and hot economy, risk on appetite is only going to increase. And that's truly what drives the price of Bitcoin and these Bitcoin mining stocks higher. So I wouldn't consider CleanSpark as much of an investment as One Stop Systems or Flux Power. I would consider it more of a gamble, an educated gamble, I guess. The fundamentals of the company are very, very strong, but it takes a gut. There's a reason these companies are hyper volatile, because if Bitcoin fails, these companies will fail as well. Before I end this video, I want to say I'm going to be releasing a brand new stock pick to my Discord members early next week, and public viewers of the YouTube channel will find out about it about a week later. So I'm just going to say this. Sometimes it does pay to be in the members exclusive Discord server, because we have companies like Fluence Energy, FLNC is the ticker symbol. That's up 50% since I started to talk about it in the Discord server. But on top of it paying to be in the Discord server, you also get to support me. I'm independent. I always want to be independent. I'm self-funded. So it's really you guys that choose to support me monthly that allow me to continue to do this and do what I love. I appreciate you guys watching this video all the way to the end. Don't forget to comment down below a stock that you're buying that I should look into. I'm always open to new ideas and new potential companies to buy. But with that, have a great rest of your day. Stay blessed. Keep 10 toes of ground in your chin up. Peace out.